And before I start, at the outset, I would like to thank SMBXL for giving us the opportunity to talk briefly about SIDBI and new initiatives to MSME ecosystem. We at SIDBI is started at 1990 as an apex institution for MSMEs. Our main role is to look at the pain points of MSME and how to address those issues. Hence, we are more of an incubator and innovator rather than a lender. We try to take out the issues being faced by the MSME and we try to coordinate with Government of India and how to address those issues. That is the basic role. That is the reason SIDBI is known as to promote, develop, and finance MSMEs. We started as a refinance institution in 1990 in the sense that we were giving the credit flow through banks, NBFCs, MFIs. And of late, we started with small finance banks and fintechs to have more credit flow to the MSME ecosystem. Besides, while doing the indirect lending, we are into direct credit also. It means we directly lend to the MSMEs. During last couple of years, SIDBI has taken new initiatives for a smooth and seamless flow of credit to the MSME by adopting end-to-end digitization of all our processes, which I would be talking about in my next slide. We are basically focusing more on green finance and MSMEs which are going for a green efficiency like energy efficiency equipments and all. We are providing them at a concessional rate and also interest subvention, which I would be talking about when I am talking about the schemes. Of course, venture capital, that is basically for startups. SIDBI has a separate entity, SVCL, which takes care of venture capital. And we have a fund of funds of 10,000 crores. That is basically for startups. And we have a tie-up with IIT Kanpur for startups to have incubation center at IIT Kanpur. They can approach IIT Kanpur if they have any idea. And they can start that entrepreneurship with seed capital that also be provided by IIT Kanpur with the help of SIDBI. With regard to cluster development, it's a new initiative from SIDBI. This is basically for the infrastructure creation like industrial estates or roads and bridges within the industrial estates or hostels within the workers' hostels within the industrial estates. This we are providing loan to the state governments, not to the MSME. We are providing loans to state government for creating infrastructure for MSME, for better infrastructure to MSME. Now comes to guarantee programs. You all are aware that SIDBI and Government of India has come up with CGTMSE in 2000. And I would like to talk about a few new initiatives that have come in CGTMSE that are now the limit has been increased from 2 crore to 5 crore. So many MSMEs can come under CGTMSE scheme. That is one. And second thing is earlier, once the MSME has availed CGTMSE cover for 2 crore, he is not eligible for next coverage. However, that has been removed now. Now, entire thing is linked to your outstanding. Suppose you have taken 5 crore under CGTMSE, and now today 2 crore is your outstanding. You are again eligible for 3 crore coverage under CGTMSE. This new initiatives have been brought under CGTMSE. And third thing is there is a provision called hybrid security model. If somebody has a collateral which is not adequate for the bank, then partly can be covered under CGTMSE. This will help the MSME to reduce the cost of paying guarantee fee. Otherwise, you need to pay on the entire sanctioned loan. With this, only certain portion only that guarantee coverage will be made and you need to pay only guarantee fee on that coverage. This is the new initiative from CGTMSE. And recently, trading is also included in under CGTMSE. The other best part is earlier the guarantee fee is required to pay on the sanctioned loan, irrespective of the outstanding every year. That means you have availed a loan of 1 crore. Every year you have to pay guarantee fee on 1 crore. Whereas now it is on the outstanding. Suppose you have taken 1 crore now, after 1 year, the outstanding has come to 90 lakhs. Then you need to pay on 90 lakhs, not on the 1 crore. Even guarantee fee has also come down very drastically. Earlier it was above 2, now it has come to not below around zero point 0.6 to 1.3. That is the range guarantee fee has. With regard to policy advocacy, SIDBI is for all government schemes, it is routed through SIDBI portal. Like performance linked incentives for pharma, textiles, all that subsidies are routed through SIDBI. Not only that, SIDBI has started a common application which is acceptable by number of banks. If a customer log into SIDBI website like Udyami Mitra and you lodge the application, that is widely accepted by the banks. These are the initiatives as a apex institution SIDBI has taken. With regard to digital initiatives, SIDBI has started the journey of credit flow to the MSME entirely through digitization, in the sense that the entrepreneur need not visit bank for each and every requirement. It is everything online. We created a customer portal in SIDBI website. The moment you lodge the application, it is through digitization. Once you lodge the application, we run business rule engine where manual intervention is not there. Business rule engine will take the data from your ITR, from your bank statements, from your GST returns, and it will process quickly, and it will help us to do underwriting faster, and at the same time due diligence is done without asking so much of information from the customer. Once the sanction is done, documentation is also possible through digitization, but there is a challenge in Telangana. We don't have e-stamping here. That is the reason the customer is required to visit the branch. Whereas SIDBI has implemented in other states, but in Telangana, that e-stamping is not allowed. So digitization of documentation, though available, but it is not being done in Telangana. Then for disbursement also, you have to, in your customer portal, you have to lodge your request online. Based on that, the disbursement process is done. So the visit of the customer to the branch has been minimized, except one visit during documentation. Rest all is through digitization process. Basically, I would be talking about four products which are missionary loans. As the today's subject is on missionary, so this would be, I feel this would benefit the entrepreneurs. Missionary loans, project loans, green finance, and working capital. Missionary loan, we have come up with a scheme called a SPADE. The name itself speaks about that the delivery is speed, in the sense that if you require, this is basically for the existing units, not for the new units. Suppose you have an existing banker and you want to go, still you want to buy a new mission, you need not require any NOC from your existing banker. You can straight away approach SIDBI. We provide you 100% assistance, and the margin which you are required to put in the project, say 25%, that you have to place it as FD with SIDBI. Rest 100% will be funded to the missionary supplier, and 25% is kept as FD, which will be paid on completion on the tenure of your loan. So SIDBI will have charge only on the missionary and the FD. This is done maximum of 5 working days. It's totally digitized. We need only your balance sheet, 3 years balance sheet, and 1 year bank statements. And we extract GST from, we have a tie-up with Jocato. It will extract your GST returns. Based on that, we'll run a algorithm and we'll provide you assistance in maximum period of 5 working days. This can be done up to 50 crores. In case you don't want to provide 25% FDR, we can do based on your promoter contribution model. That is 25% you will put in the project, 75% will be disbursed by SIDBI. So both options are left to the customer. This is linked to MCLR, and SIDBI's MCLR is at 8.2, which is the lowest in the banking sector as on date. This is the scheme called Express. As I said, when you lodge your application, we ask for your IT returns, 1 year bank statements, and GST returns. This all will extract from the system. You need not provide outside the system, just you have to upload in the system. The moment you upload the system, it will run business rule engine. And once you are able to get fit rank, that is called finance income trade rank. Finance we generate from IT return, income from your bank statements, and trading from your GST returns. Once it throws fit rank and it comes between 1 and 6, within half an hour, you will get an in principle sanction to your mail ID. There is no manual underwriting, it's totally a digital underwriting. With this, within half an hour, you'll get an in principle sanction. And the processing fee is also, we charge only 50% what we charge. Actually, we charge 1% of the sanction loan, but in Express, we charge only 0.5 as a processing fee because of manual intervention is not there in this process. This for the new customer, we can give up to 1 crore for the missionary. And the other system is same, like 100% finance will be done. Your margin of 25% will be kept as FD with SIDBI. And you get at a rate of 8.5, between 8.5 and 9.75. This is purely depend on the internal rating. For every company, we do internal rating. Based on that, it will throw the rate applicable to that enterprise. This is what the basic requirement for Express. You should be mandatorily registered with GST, and you shall have Udyam registration and in operation for 3 years. That is the eligibility criteria. Once you comply with this, this will throw a fit rank, and if you are eligible, you will get in a half an hour's time the in principle sanction. This is called arrays. This is for existing units, for project loan, as well as for the equipment. Suppose a existing unit would like to go for an expansion which involves land, building, equipment. Under this scheme, we are able to do up to 50 crores. And here it is not an 100% funding. Here the promoter has to raise his margin, a minimum of 25%, and SIDBI will provide you 75%. This you can include any expansion program, business expansion plan, or modernization, or a big expenditure, capital expenditure, or you want to have a unit too. These are all can be covered under this array scheme, and loan up to 50 crore is provided. Again, this is linked to MCLR. Sthapan. This is for greenfield projects. Greenfield projects means an entrepreneur setting up a new unit. We can provide you land, building, machinery, and the best part, SIDBI is different from the commercial banks is the projects coming up in TSIC land. Commercial banks are not considering that as a part of the project. So in the process, what is happening? You would be investing in the land, a TSIC land, but that is not part of the project. So when then they again ask you to bring margin in the project. Say the project cost is 100 lakhs excluding land. They will ask you to bring your margin, say 30%, and 70% will be provided by the bank. And the investment you made in the land is not part of the project. Whereas SIDBI is considering that land as part of the project and as your contribution. So your outflow in the project will be minimized. That is one. And second thing, when we compute the project cost, we include the interest payable during the implementation of the project. For example, your project is taking 1 year for implementation. You all know the day we disburse, you need to pay interest on that amount from the next month onwards. So when the company is not ready to generate any cash flow, where from they will make payment of interest to any bank to that matter. So what we do is, suppose the implementation of the project is for 1 year, we include the interest payable during that 1 year in the project cost, out of which the customer need to pay. So there will not be any burden on the entrepreneur. That is one. Second thing is, when you approach your working capital banker, they will ask you margin to bring in. That also be included in the project cost by way of margin money for working capital. Other than that, there is a preliminary and pre-operative expenses, which is for the incorporation of your company or for paying processing fee. Everything that also can be included in the project cost, which you can take the advantage of capitalizing over a period of 5 years once the unit is on. So these are the unique components in the project cost which SIDBI considers for a greenfield project, which otherwise you don't find in the normal commercial banks. Here also we can go up to 50 crore, subject to maximum of 75% will be a term loan and the balance will be from the promoters. For everything, basically the important parameter we look at is the CIBIL of the customer and the CMR rank of the enterprise. CMR means CIBIL MSME rank. For the new units, there will not be any CMR rank because there is no vintage for that unit. Whereas for the existing units, it will generate a CMR rank. Our preliminary due diligence is basically on the CIBIL CMR of the customer, of course, the financials. If the customer is complying with these parameters, the funding will be faster and easier. Our focus has shifted now for a green finance scheme. If any entrepreneur is going for a green building or green products or materials, we are providing an attractive rate of interest with quick sanction. This is a special scheme come up by SIDBI even for ESCOs in the sense ESCOs, RESCOs, in the sense that those are energy service companies which implement projects for the industries for energy efficiency like rooftop, solar rooftop, windmills, water management. These sort of are waste management. These projects are covered under this green finance scheme. Now I'm going to talk about important scheme which is called end-to-end energy efficiency scheme. I spoke about speed, which is an equipment funding. This is also similar to that. But the difference between speed and 4E scheme is that this is purely for energy efficient equipments. We have identified 890 equipments. If a customer going for an equipment which falls under this 890, whatever maybe, then we would be giving a competitive rate linked to repo. As you all know, repo is 6.5 and with some margin, it is very competitive. That is one. And recently, SIDBI has come up with a gift scheme. The gift scheme is eligible only for micro and small units. If your equipment is falling under this 890 list of equipments, we'll not only we'll be giving at a MCLR, not at a repo rate, but there will be a 2% interest subvention up to 2 crore every year for a period of 5 years. Suppose in case you are paying us 9%, every year you will get 2% interest subvention directly paid to you on after completion of March. So effectively your rate of interest would be around 7%. This is the new scheme SIDBI has come up. And another important is that entrepreneurs going for rooftop solar for captive use, that can be covered under this 4E finance scheme. We have been doing it, and under this they are getting at a subsidized rate at 100% funding with only 25% margin by way of FDR. So many entrepreneurs, and presently SIDBI, most of the lending is being done in 4E finance scheme. Yes, SIDBI, we also provide you working capital facility. It is a composite facility like term loan and working capital, both we can provide. The only challenge SIDBI is having is SIDBI is not a bank, it is a financial institution. So we are taking help of IDBI Bank, S Bank, City Union Bank, and we are using their platform for day-to-day operations of the entrepreneurs. For example, we do the sanction and drawing power is being set. You can operate any of these three banks for day-to-day operations. Checkbook will be issued by them, and for internet banking, everything is your contact will be either City Union Bank, S Bank, or IDBI. But for drawing power, renewal, enhancement, for all other purposes, SIDBI is the contact point. So only we are using the technology platform of the commercial banks. This is Swift. It is like a OD facility for the existing units. If you are not having any working capital facility and you need to you require some OD facility for executing a particular order, this is the scheme. You can approach SIDBI and we would be providing purely based on the security. Here you have to give us a mortgage and we would be giving you 20% limit on your sales turnover in the last 12 months. That can be extracted from the GST return. So the minimum is 3 years vintage is required for the existing unit. This is purely for the existing unit. The earlier one is even for the greenfield, but this is only for the existing where OD facility is required. The difference between both, you all know that the stock statement are not required to be present in OD every month. Whereas in working capital facility, you are required to provide stock statement every month to the bank for fixing the drawing power. Thank you. If any questions, I'm like to take those questions. Screen. Screen.